Our largest, most important financial institution today is Bank of America. Bank of America has something over $2 trillion in deposits. It has 40% of all the deposits in the United States. It is the banking system. Well, they invested almost $700 billion in bonds during the COVID summer, the summer of 2020, when long-term 30-year interest rates were at 1%.
Oh, man.
The value of those bonds has gone down almost in a straight line, and I think those bonds are now down something like 40%. Could be a little bit more now. I haven't seen the latest price. But the point is they're hiding enormous losses. They say those losses today, Bank of America has disclosed, there's something on the order of $100 billion. Okay, so if Trump destroys this recycling of U.S. debt that has gone on for 50 years, what that also means is he's destroying the ability of the Treasury to refinance. We've got $9 trillion worth of Treasuries to refinance this year, plus another roughly $2.5 trillion of new debt. So Treasury's got to go out and sell $11 trillion worth of Treasuries this year. I don't know how that's possible if Japan isn't buying, if China isn't buying. And by the way, not only are they not buying, the world has been selling our Treasuries on a net basis now for 3 or 4 years, and they've been buying gold instead. And so I think you can look at the price of gold versus the share price of Bank of America, and you can see something bad coming down the pike. Because if there is a failed auction ever, or if the Fed has to come in and start buying again, which is what they will do, the inflation expectations are going to go crazy, and there will no one sees this. There will be a run on Bank of America, and there will be a day where the ATM machines do not work. And by the way, people say, "Oh, that could never happen." Bullshit! It happens all the time. Fractional reserve banking systems fail all the time. They're built to fail. And that's what happened in 1932. And, of course, what did the government do? The government seized all the gold in the country in 1933. So I see a clear set of circumstances, like I did with Fannie Mae and Freddie Mac, that to me, the numbers are crystal clear. What's different about America as opposed to Japan in 89 is Japan had like a 25% domestic savings rate. They had enough domestic savings that they could afford for their government to be 200% plus of GDP in debt. We can't because we have no domestic savings. Total domestic savings in the United States is less than $5 trillion. Less than. There's no way we can refi 11 trillion plus in bonds in 1 year because we don't have the domestic savings to do it, which means we depend on the kindness of strangers. And yet, what are we doing? We're pissing in those strangers' Cheerios. That is not good treasury management. And I'm telling you, this will happen this year. The Fed is going to have to go in to buy bonds again. And when that QE, quote unquote, starts again, the long-term yield on Treasuries is going to go well above 6%. I think it'll go above 7%, could easily go above 10%. Nobody sees that coming. Nobody's pricing Bank of America equity right now at 10% Treasury yield. In fact, if you want to have some fun, go ask Grok. Hey, Grok, which is, X's AI. Tell me what the situation looks like for Bank of America if Treasury yields go above 10%. How could the bank survive?
There's a reason why the world's best informed investors read my daily journal. Subscribe for free at portersjournal.com.